Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 2nd of November. Starting off with the Bushveld Minerals, where I wasn't that keen on looking at the stock because I thought that the shares only had upside up towards 40 pence, which would be that line there, which is the logical thing. But stepping back a bit, you can see there's a line there from the beginning of 2017, so that could hit 60 pence over the next month or two. Obviously, the initial target towards 40 pence, and that's valid while we hold above the old September peak of just shy of 32 pence. Any dips towards 32 regarded as a buying opportunity in the first instance, given that we are a little on the overbought side. But the big target there, the big headline there on the technical basis is 60p. Hopefully even as soon as the end of the year. Brave Bison, I believe I looked at a little while ago, but worth a second look now. In a triangle there from from May. Just need to see an end of day or end of week close above the 50-day moving average 1.63 pence and that resistance line from May, and we could have a retest of the 3 pence zone. Obviously, if you're aggressive, you'll already be in there now. Otherwise, if you're cautious, wait for the 50-day line to break. Stop loss back below, let's say 1.4 pence at the moment, which is that the bottom of that triangle. Very pleased to see that Frontera is delivering a pie in the face to the doubters. Had a nice little triangle breakout yesterday. 0.45 was the level that was suggested as being the trigger point there for a possible move to the upside, and we got that yesterday. A bit of a pullback now, but overall the target here on Frontera, while we hold above 0.45, target as high as 0.75, which is the top of a 2018 rising trend channel. Stock which might be starting to move again after being rather quiet is Fastfwd. Here we've got a break out of this falling wedge from September. Top of the wedge there at 11 pence, so just gapped up through that today. If you're cautious, maybe an end of day close above the 50-day moving average at 11.77, target there towards 15, 16 pence. In the first instance, stop loss back below 10 pence. Lap of honour on it's called Potash, actually, KP2. Just wanted to revisit this, partly just to underline how reliable and how useful falling wedges have been. We had the break of that falling wedge from August yesterday, obviously an almighty rally after that. A bit of an inside day so far. Want to see this 7 pence level broken, maybe on an end of day close basis today. And the big target here up to 10 pence, which is where the shares were back in at the beginning of May. If you were thinking of a stop loss, probably back below 6 pence at this stage, because that was the resistance on the way down in July. Premier also looking healthy at the moment. Premier African Minerals, another triangle breakout yesterday, basically, with the shares pushing through 0.2. While we're above 0.2, looking for a target towards 0.3, 0.35, which would take the stock to basically where it started at the beginning of the year. Stop loss back below the 200-day moving average at 0.18. Rather obscure stock now in terms of probably investor interest, but we do have a clear falling wedge situation here from June at Reneuron. We just need a break, 61 pence probably on an end of day close basis, maybe up to 62 pence if being fussy, and that could take the shares back towards the £1 level. The reason for the excitement is the sharply rising 200-day moving average way up there at 81. That should provide positive momentum, and the next time the lines cross the 50-day and 200-day lines, it should be a golden cross. Traditionally, the most bullish part of the cycle is the run up to a golden cross between the 50-day and 200-day lines. Finishing off with another very strong looking situation, Safestyle here, gapped up through this triangle from April, last week or the week before last, and through 60 pence resistance, which is a very, very strong technical signal there, and has melted through the 200-day moving average at 72 pence. The view at the moment is while we're above, let's say, 80 pence, the shares should at least head towards the bottom of that February gap to the downside at £1.20. So nice little setup there, but always very good when you see a stock or a market basically head up in a step fashion as this is doing. So you have the vertical move, then sideways, and then up again. So very, very strong setup there for Safestyle. That's it from me. More updates on Monday.